So this is our setup. This is our pair. So this is the pair I've chosen to trade today, Xauusd. So those who don't know me, I hope you've been on my live stream before. So today it's going to be a good day for us. We trade gold. So now on this live stream, so on this live stream, we are seeing that. So how could we do our top down analysis? So our top down analysis, we always begin with the weekly time frame or the monthly time frame. So maybe like here, we shall begin with the monthly time frame. Because why are we beginning with the monthly time frame? We are going to begin with the monthly time frame because the month ended this week. Remember, next week we are beginning a new month. So what I'm going to do here, I'm going to come at this point like this. I'm going to come at this point. Then I'm going to add this month here. So I'll have to add the month here. So this is the month time frame. This is the month. So we shall begin with the monthly time frame. But at this point, I'm going to first delete all the lines you're seeing here. Then we shall then I'm going to draw them afresh, the way I always analyze gold. So I'm going to show you guys step by step. I'm going to show you. So let me first erase all the lines. So I'm going to first show now. So when we come to the monthly time frame, I'm going to mark its high and its low. That's it. That's I'm going to mark it. So I'm going to mark this candle. So why am I marking this candle? Is because the month has already ended. If we were in the still a new week, when the week has already ended, then I could be in the weekly time frame. But since the month already ended, so I'm going to mark this month. Yeah? So it's high. We are seeing that it's a high. So I'm going to use this horizontal line. There's a horizontal line here. You just come there. So its high is at that point. It is around 4778. That's its high. Then its lowest point is around 4367. Now here's the range now. So at this point we are having that price was ranging within this zone. This is the zone price was ranging, if you can see it. This zone here. So price was ranging within this zone. Remember that was May. Price has been ranging within this zone. So it means that any breakout or a breakdown. So a breakout means that prices are going to shoot up. That's a breakout. So the difference between a breakout and breakdown is like this. So a breakdown will appears like this. This is a breakdown. So when prices break down, we call it a breakdown, not a breakout. So we shall either have a breakout to the upside, and when this monthly candle is broken, we shall see prices coming back to test this liquidity. Remember, there is some liquidity point here. There's a wick here which will have to be filled at some point in the nearby future around this zone. So we are seeing some zones here which will have to be filled. Remember, there is a clean candle here. This candle is a clean candle, but up here there is a wick. It means that price will have some business here. If there was no wick here, prices could not have any business within this range. So there is some business there in the future. Also here down, we are seeing some businesses still here to first fill this week or to first collect this liquidity here. So we are seeing that we may see that this next month may be very, very volatile, because if you also look at this candle which has closed for the monthly, is showing that maybe it is an indecision candle. On the other side, it is indecision. It is showing that now buyers and sellers don't have what to do in the market. So we shall see. The first week is going to decide where the market is going to end. So if we have a bullish week or a bearish week, we shall see that once our weekly breaks above this, we shall see that that week will be bullish. If we see breaks below, we shall see that week month will be bearish. So after marking these points, I will come in the weekly time frame. So now I have my key zones. So for me, I will call them key zones. Those are the key major zones I'll have to focus on. So it means that if I'm a daily trader, because there's a daily trader, there's a swing trader, there's a position trader, so it depends which type of trader are you. So depending on your trading type, if you're a scalper, you don't have to wait for these zones. If you're a day trader, it means that you are trading within these ranges. For a swing trader, is waiting for price to fast retrace down here. Swing traders waiting for some price to fast retrace within these weeks, then to catch a strong move up to this target. Yes, for swing traders. And if you see clearly, this weekly candle is a strong bullish rejection candle. If you can see it, this is a rejection candle. So this week only indicates that sellers were rejected. Sellers were rejected. So they were trying to sell down, but they were rejected. Since sellers were rejected, it shows that buyers are still in control of this market. So that's how we can read price action. So price action means that you can interpret what the candle is telling you. So we are seeing that here the weekly candle sellers were rejected within this zone. So what shall we expect? We shall see that now we are going to change the color levels of this weekly candle. We shall mark this week. This is the weekly candle. It is a doji, so I'm going to change this color to purple. Yeah, it's purple now. So I'm also going to also mark it now. Remember now this is now, so I'll also mark within also this zone, but it's already been marked. Yeah, so we are seeing that this candle here, so it means that next week when I'm trading, I'll be trading within the zone. So that's what the book interprets. If you're trading within the zone, so you have to ask yourself, which zone are you trading? Remember, this zone is too big. This is 2,300 pips. It means that you can still make a lot of money within this zone. So in this zone, even a swing trader or a scalper can make money. So since the zone is too big, we still go down and narrow it down and still look for entries. Remember, the monthly is showing that it is a bullish. You see? Yes, the monthly, if you can see it here, the monthly was showing that here, as we had drawn it, this week, the middle candle here, it had shown that there's a strong rejection within this zone. Sellers were rejected. The week shows the sellers were rejected strong rejection. So these indecision candles, two indecision candles, shows that the market is trying to lose momentum of sellers. So sellers were losing momentum, indicating that very soon we are going for the bullish run. So that's what it indicates, that sellers were losing power. The moment you see indecision candles in the higher time frames, it means that the market is trying to reverse. So it means that we have to change our positions So if you've been holding for strong sales, then we should start looking for strong buys within the near quarters here. So we shall see that since this is the weekly, remember we are in our range, so price is within here. So this is the weekly zone. Yeah, so if it happens we go to the daily zone, so we just enlarge this chart. Now you have to enlarge. Remember, you are not going to execute your trades within the weekly because this is gold. You only have to keep on minimizing the chart. So we are going to enlarge this chart, as you can see it. So we keep on going down now. So you will see that these zones are now too big. Yeah, you see here. So if you see now, so prices, so on the weekly time frame we are seeing that this is the weekly zone. So we are seeing the first resistance price came and being rejected here. So buyers were rejected within this zone and coming back dropped 500 pips. So it means that this zone is a strong selling zone. This is a strong selling zone. So the daily time frame is showing that buyers were rejected in the strong resistance zone. What does it mean? It means that we shall need a strong bullish candle to break above this line. So these are the key points. Remember, when you are trading, you have to look at the key major points. That's where the market turns. The market only changes in the key major levels in the market. So we shall see that these are the major levels. We have the major level in the daily, the major levels in the weekly, in the monthly. So we know them. So at this zone, we know that when market price to reach here, we shall see more rejections, either next week or the other week or next month. It will be again rejected. So we shall see that we shall have to see some candle coming like this, strong candle closing above. So if we happen to see a candle closing above like this, then it will indicate that we shall see more buyers coming in the market. Once we see a bullish candle closing above, we shall see that prices will also have to continue up to this weekly to be tested here. So we shall see that prices will also continue up to this zone. Once we see the candle closing above this major key zone, so prices will have to test this zone. That's the fact. So also, if it happens that maybe prices are being rejected strongly and we see a strong breakout like this, strong breakout like this, so we shall have to see some sort of prices coming to fill this week. In trading, there's what we call a week fill. We shall see prices filling again this week here down. So whenever you're trading, you always have two options. You are either going to buy or you are either going to sell. So you have to be ready of the two whenever you're on the charts trading. Either you're buying or you're selling, but you don't have to fix your mind on one thing, that maybe I have to sell, maybe I have to buy. So you only have to see put your eyes on those zones. What's going to happen on those key zones? So it means that when we are trading this week, that will be our eyes within the zones. So the zones, the prices, what's the prices at that zone, what's the price? So that's the daily. So we have to see some sort of breakout, and also maybe if we see this candle closing with a wick, leaving a wick down like this. So if this candle closes leaving a wick, we shall also see another candle opening, trying again to fill the wick. So this is how candles move. So you see some sort of wick up like this. So you see some sort of wicks up like this, like that. Yeah, so that's the thing. So that's what we are hoping to see. So it is either way, either a buy or a sell. Yeah, so in the 4 hour time frame, when we come in the 4 hour time frame, so we have got now ideas in the key zones. So the 4 hour time frame is going to show us that everything is clear. Now what am I going to do in the 4 hour time frame? The 4 hour time frame, I'm going to now mark now the zones. What am I hoping to see now? So the zones are showing me that I'm seeing a strong demand zone here. So that's why prices were rejected here. If you look at this point here, if you look at this point, someone may ask that why did price start shooting from this point? Why did price shooting from this point? Why did this start shooting from this point? So it started shooting from this point because the market doesn't just react on its own. If you check on your left hand side, you will see that maybe at some point some strong buyer was there. If you look on the left, you just see it. Remember, we are from marking the daily time frame. I told you the monthly time frame was showing that there was a strong rejection there. So you will see that on your left there were strong buyers who rejected before. Remember, technical analysis, we are trading historical data. So there was some rejections here, strong buyers in the demand zone. So this zone, it was still unmitigated. If you can see here, I call them unmitigated zones. So this zone was unmitigated before. So if you can have a look at this zone here like this, okay, so it's like this. uh, so I'm going to play this price, and you see that for example now it's like I'm trying to backtest this price, and you see it clear here. So if you see this zone here, before prices moving down here, we were seeing that there were some orders to be filled around this key zone. So you are seeing that there was a strong buyers were here, and these buyers, this is a daytime frame, buyers were rejected, forming a double bottom within the demand zone, so shooting up. So coming back, there was a wide change of character within the daily, so prices had to first come again here. So here in demand and supply strategy, someone will call it, here it is unmitigated demand zone. So this zone was unmitigated before, so price had to come back to fill this zone. So how did it come back? So we shall play the price. So you will see that prices came back to fill the zone. Okay, yeah. For example, if we play here our price, so you are seeing price was moving slowly by slowly. So when it came back, it showed a strong reaction. This candle showed a strong reaction. You can see it. I can play it again. You can see it here. Okay, so you can see that when it came, it showed a strong reaction. When it came, it showed a strong reaction within here. When you reverse back the price, so it means that it was filling the unmitigated zone. So this zone is unmitigated. So gold is that pair which respects every zone. So the only problem with gold, it reacts very fast in every zone. So when you are trading it, you only have to be somehow fast in executing your prices. So you have to be fast when you're executing. So that's how it came. So you are seeing it very well that there was since it is here, I will, here I'm showing you that, for example, here, let's start here from here, and I show you how prices were moving. So you see that, so you see that at this point, I've told you that uh, this zone is unmitigated. So this is a day time frame, but you remember that you are a swing trader now. You want to again hold your buys. Now, someone bought from here, so it's being stopped out now. Who was a swing trader? Some swing trader. Another one who bought from here was being stopped out. So prices had first come back to mitigate this zone first. It means that it was looking for liquidity in the market again to run. So you are seeing that. So the candle which tapped there is showing that it was a strong rejection candle, if you can see it there in the daily. So what are we going to expect this week, this new coming month or week? So we may see on Monday opening, we may see a stronger candle running like this on Monday opening. We don't know when, but you may see some candle opening running like this. Why? Because of this strong rejection. And if you can see the order of this candle, we are seeing that the first candle, it shows that maybe there was some bit of accumulation. Maybe this middle candle is showing some bit of the market has been manipulated, or sellers were being trapped. So how are sellers being trapped? So it means that liquidity has been taken out from here now. So it means that market will first come to and rise up to some points here, then we shall see what will happen next. But the chances of this market going up, I see that it may be high this new month. So yeah, but the chances of it again dropping up this point, so we also have to first measure the zone. So to fill this week, you see that this is 2000 pips, 2070 pips. But just look at the zone which it has to fill at some point here. You see that it is over 3000. So it means that it will first look for the big zone. If you see, either it will first trap the sellers, here, but it will later on shoot up. So that's my take on that thing. So I will say on the 4-hour time frame. So here we are on the 4-hour time frame. So after, because remember we are doing top down, so on the 4-hour time frame we are seeing our major key levels now. So the major key levels has been already marked. So this is our reactions. So prices reacted at this point this week here, reacted at this point. Yeah. So within this zone, you are seeing that this is the first reaction, second reaction, the third reaction. Someone may call it maybe a what? A minor resistance. It is not strong resistance, it is minor. Why is it minor? Because this resistance is not in the monthly time frame. The major resistance is this yellow line which we marked in the monthly time frame, but these resistances are minor. That's why anytime they will be broken. So these are minor resistances and this is our minor support. So when we are trading, our major eyes are within these major zones. So this zone here, this zone, so this zone up and this zone down. So that will be our major focus when we are trading and to add in more positions. So any breakout and retest, so we have to see a clean breakout a breakout and retest, it will be a strong confirmation to the upward. Or, but in the 4-hour time frame, what are we seeing? We are seeing there's a minor support. A minor support is around here. You can see it. Remember, when you are making top analysis, you have to do deep in it. So there's a minor support around here. So this minor support is going to tell you that if this minor support is broken with a strong candle, you will see that prices will have to come again back here. That's the point. So that's why if you're trading, you have to think of two possible things in the market every day. Either you will buy the market or you will sell, but you don't have to fix your mind. So this is the this is a minor support. So when you're trading, so your eyes will be on this point here, like this, and your eyes will be on some minor zone up here. So it means that you have to wait for prices to come in this zone. So this one, someone may call it some bullish order flow now. Yes. So for example, now you've finished to do your top down analysis, you want to look for your entries. So this zone, you have marked it very well. So this is a bullish order flow. It is a big zone. In this bullish order flow, we shall see there is an order block will be inside. If we continue in the lower time frame, we shall see some fair value gaps there. So if price respects that minor support, you will see that prices will first come here, reacting off consolidation, it will be there, then it will take off the upside if it respects that zone. If it fails to respect that zone, it will just have to just come and break, come again, starts like this, until it will drop down. So that's our major focus. So it means now if you go in the 1 hour time frame, so now we are trying to look for entries. Now just understand, now you are doing top down analysis, but at the same time you are trying to look for entries. Top down versus entries. You are doing top down, but how are you going to get your entries? So you have to also find your entry key zones, that even if you wake up in the sleep, when you find the price there, you just buy or sell. You don't have again to think about it. As long as you've identified your entry zones, then you don't have to overthink. But another thing is that you have to identify the risk. What's the risk? So the risk in this zone is 260 pips. It means that for someone to enter this setup will have a minimum of $30 to execute a 0.01. If you want to hold this trade, to make $70 if you want to hold this trade. In case prices come here and you see a demand zone, you have to have a $30 account to execute 0.01 with target to make around $80, because yes, this is an A plus setup. So if you see prices, so but if prices reject this zone, we shall see it dropping. Why will it drop? Because if it drops, we are seeing that when there was a clean breakout here, when there is a clean breakout around this point, so you are seeing that there's a breakout. Market structure shift here, market shifted to the upward. But what if the market comes back again to fill this fair value gap? Remember, this is a 4-hour time frame. What if it comes back within here? Because this is gold, it can do everything it wants. It can come back, think that you wanted to buy in this zone, then you are taken out. It first comes back again here. There is another buying point here. These are buying points here. There's another buying point. Why is it a buying point? Another seller was rejected on your left. This is a seller who was rejected. So it means that there's some buying power around this point. So if you're looking for buys in the market, you have to mark all the buy zones you are going to buy in. If you want to look for sales in the market, then you have to look for every selling point, such that when you find price in that zone, you just either sell and forget or buy and forget, without overthinking like that. So we are seeing around here or here. So we have this zone again, second buying point, third buying point. So someone may ask, what is the strongest buying zone now here? So the strongest buying point is down, just down here. So we are saying that this is another buying zone here. So it means that if you buy from this point, here, you are a high risk trader. You are just high risking your account. So you buy in this zone, your account is at high risk. So you buy in this zone, your account is medium risk to be blown out. I'm saying to blow an account, medium risk. So if you buy in this zone, the account is a low risk. So it's very hard to blow that account when you buy in this zone. But the only problem where it comes is that being patient to wait for all these setups to happen. Remember, this is a 1 hour time frame. So what's my view on this? When you are trading like this, remember, God mostly respects price action. So you only have to have keen eyes on these zones. After marking your zones, this is the first zone, this is the second zone. So we can say we can say maybe this is a high buy zone. It is a buy zone, but it is high. But this buy zone, it can also turn into a selling zone. So I've told you that you have two things in the market: either you are going to buy or you are going to sell. So this is a medium buy zone. Here, it's a medium buy zone. So here we are seeing this is a low buy zone. Low buy zones. So after understanding this, so you only have to ask yourself, which type of trader are you? Are you an aggressive trader? Are you a medium trader? So it depends on how you feel, because the question is, are you willing to risk all these pips? This is now here you're risking 1,000 pips to execute this first buy. So it depends on your account size. So in this zone you are risking 700 pips to execute the buy. So it depends on your risk. So before executing any setup, you first understand the risk you are going to take. Then you will not be emotional. So that's the thing. So those are the 3 zones we have already marked there. Yes. So that's the 1 hour time frame. So we are going the 45-minute. So last today I will go in the 15-minute, because 15-minute it mostly gives some precise entries without fake outs. Now here, this is a 45 time frame. But mostly is to confirm in line with the 15-minute most times, but I use the 15-minute for entries. Now lastly, if I check in the 15 time frame, so in the 15-minute time frame, what am I seeing? 15-minute time frame, what am I seeing? Yes, 15-minute time frame, what are you seeing? So it means that, so the reason why we go on in the lower time frame is to reduce the risk. That's the major reason why we go on the lower time frame, depending on the pair of trading. Now, for example, gold, to minimize the risk, you have to go on in the lower time frame to reduce your risk. But if you're trading a currency pair, you can execute your orders in the higher time frame. But for pairs as gold, volatile pairs, those Nasdaq 100, so you have to go deep like this to measure your risk. So what's the risk now here? So if you measure the risk now, I can divide this risk into, maybe I can say I'm risking 130 pips, because risk can be measured in pips. So pips is the difference in prices. So let's say your executed is 0.01, so it means that my stop loss is $10 here. That's it. But my target, the nearby target, will be $50 on a 0.01. Yeah. So the risk here, we are minimizing risk now. So that's the thing. So it means that once we see prices coming back in this point, like this, so we must first confirm from the first bar. So the first bar will have to first react off. Remember, whenever gold comes in any zone, it will first leave a reaction first. How will the first bar react? Then how will the second bar react? So in most cases, our eyes will be either on the second buyer. That's where our eyes will mostly be. So the first buyer may be a fake out. If the first buyer may fake you out that we are buying, then we let us sell on. So the second buyer will give us a strong confirmation, and with alignment with your strategy. So depending on your strategy, but in most cases, the reactions will always be the same. Then how are you going to enter? So do you always enter on the first reaction? Do you always enter on the second reaction? Remember, in most cases, people who enter on the first reaction, now for example, if you've entered here on the first reaction, maybe prices came here, then dropped this minor support, then you buy from here around this point. So you see that you buy from here, but prices again came deep around this point. So the first reaction was around here, the second reaction is coming around here. So this is where we retail traders are being stopped out, because you've bought at this point, but price is going to hit your stop loss. After hitting your stop loss, it's going to move in the direction you've predicted. So it means that to reduce your risk, you have to calculate to see either you enter in the first reaction or the second reaction. In most cases, the second reaction gives a low risk entry setup, and the target is always 100 pips. Most setups on gold 100 pips, like, yeah. So that's it. And now if you look at here, so those are the key zones we have marked. So after marking them like this, then you can be come back on Monday, then you see what price is going to do in those zones. After marking your zones, you leave them like that, you come back a new week, then you have to see if the zones are valid. You will see price reacting in every zones you've drawn. If the zones are invalid, price will have to violate all those zones. But if the zone will be valid, you will see on Monday price will have to react in it, will have to confirm it. So you only come to watch your key zones. Another thing,